You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the Infinite Banking Mastery Podcast. Before I get into today's message, I wanted to share one more story based off of last week's topic, which was getting life insurance coverage in place before it's too late. As this topic is super important to me, I wanted to share one more story that I forgot to share last week. I have a friend that I've been friends with for years, decades even. And I met with her and her husband about life insurance after I had just gotten back into the financial industry years ago. This was after I had been at a large broker-dealer when the market tanked, and then I had stepped out of the industry for a moment and was in the assisted living industry, and then came back in and discovered how to help people with life insurance strategies. And I was just getting into that. And so I asked if I could sit down with them just to get a picture of what they were doing and try to help them any way I could. They were interested in learning at first, but then her husband started throwing out objections and he felt uncertain. In the end, I did not end up helping them with any coverage. Well, since then, he has gotten a terrible, terrible illness. It just breaks my heart what they're going through. And now he's totally uninsurable. I did talk to her about it a few years back, that I was sad that I wasn't able to make sure that they were taken care of, and because they were such good friends, and it just breaks my heart. And she mentioned that he had coverage through work, which of course is good because any and all coverage is great. However, you have to keep in mind that if you get too sick or hurt to work and you have to leave your job, then you will lose your life insurance coverage through work. Group insurance doesn't tend to travel with you. There may be some companies that have portable policies, but that is definitely not common, not the norm. This is why it's so important to have an individual policy, not just one through work. Now, if you are offered one through your work, I would absolutely take it. The price of these policies is usually super low and affordable. I take all the group life insurance that is offered to me. And actually, I was also just recently offered additional group long-term disability coverage. And even though I already have 4 policies, I, of course, took the maximum amount that they were offering me. Darn straight, because with all the policies that I have, it still doesn't equal 100% of my income because the state doesn't allow you to cover 100% of your income. I just believe that no matter what you are offered through work, that you need to make sure you have an individual policy. When it comes to life insurance, you should have something that is guaranteed to pay a death claim to age 121. Or even if it's a term policy, you want to make sure it's convertible term so that you have the opportunity to convert it to something permanent if you end up deciding you would like to keep some coverage in place when your term is about to expire. Now, one thing you want to note when you're looking into this type of coverage, convertible term, is how many years are you able to convert it and into what products. Some companies don't allow you to be able to convert into their whole array of permanent products. Maybe they just allow you to convert into a certain type. And so it's good if you have the flexibility to convert that into any of their products that they have. It's just a good idea to know what it's convertible to and for how long. Sometimes they're only convertible for 5 years with certain companies or up to a certain age. So you just want to make sure you know what that is. And sometimes I talk to new clients who have term insurance in place already with a different company. If it's very recent and with a certain handful, maybe there's like 15 or so companies, sometimes we can convert that term into the companies I'm working with in order to begin my whole life policy and infinite banking, the infinite banking concept. But usually I'm not able to move policies over from other companies. And sometimes clients aren't sure if they should keep the policy they have or get term with the company that we're building their whole life policy with, I usually will recommend getting some term with a company that you're building your whole life insurance with, because then as you want to convert pieces of that term or portions of that term, as the years roll by and you grow your banking system, or as you want to start growing your banking system, then you can easily convert that with a company that we know we can build good whole life with and structure it well and all of those things. If you want to keep the policy with a current company that you have, because of course, any existing term insurance that you already have in force will be less expensive because you got it younger than we might be applying unless you just applied for that policy. Age obviously makes a difference with cost of term insurance or the cost within any life insurance policy. So sometimes clients will want to keep the policy, the current term that they have, and that's perfectly fine. We can either also apply for term with the new company or just not worry about it for now and let them keep the term that they have with their existing company, start a whole life policy, and then when they're ready to grow their banking system, we can hope that they're still insurable as they'll have to go through underwriting again, since we can't convert the term from another company. I just spoke with some clients recently who have term policies right now that will remain at their current level pricing for about another 6 years. They are about 3 years away from turning 70. And so for the policies that they currently have, they are only able to convert those to age 70. So even though those policies will remain in force to age 73, the company has a rule where you can only convert term insurance policies to age 70 or the full term, whichever comes sooner. So they are currently pondering if they will be converting some of that term to make sure the price is locked in and that they will retain some of that death benefit that will be guaranteed to pay a death claim to age 121, whether for funeral expenses, to pay off any remaining mortgage balance for the survivor, or to help the survivor with any medical expenses, either from the spouse that passed or from the spouse that's a survivor, or any other needs of his or her own. So even just having a standalone term insurance, an individual term insurance policy, is going to be better than only depending on your work coverage, your group policy through work. Because if you get sick and have to quit your job, you can almost assuredly kiss that policy bye-bye. Okay, so the topic that I actually wanted to get into today was the topic on what banks think of your life insurance loan when you're applying for, say, a mortgage or another type of large loan, maybe a HELOC. Well, good news, my friends, they don't care at all. Since your life insurance loans are loans that are backed by your own cash, the fact that you have outstanding loans makes no difference to the banks, the loans that are within your life policy. They know that you can wipe out these loans easily with your own cash that's backing them. Therefore, they view life insurance loans quite favorably. Not only are they low-risk loans, since they are backed by the policy's guaranteed cash value, but they typically, and certainly lately, come with much lower interest rates compared to other types of loans. And remember, some companies have a loan that's a variable loan and some have a fixed loan. I happen to have one of my primary companies will allow you to switch back and forth. As long as it's been 1 year since your most recent loan, you could switch it from variable to fixed, whichever direction you want to go. But either way, the rates are low right now, and that's for anybody acquiring a contract. Again, if you have a fixed loan, then that's guaranteed for the rest of your life. Awesome. When I have had clients reach out because they are buying a house and need information regarding these loans, I have always been able to just save a screenshot of the client's account on my screen of what I'm currently looking at and send it to my client for them to send to the bank. One thing that often gets confused is that the bank will oftentimes ask for a current statement or a really recent statement, and the most recent statement will always be the annual statement, the most recent annual statement, because insurance companies only give statements once a year. It's not like investment companies where they will give you a quarterly statement or even a monthly statement so you can access more recent information on something already more formal like a statement. Life insurance companies don't operate that way. They just send out one once a year. Now, it's generally a smooth process. Not all banks or loan officers understand this fully, I would say. Sometimes they think they need more information or some other type of statement, but nope, this should be all that they need. I've dealt with this time and time again for clients purchasing homes or getting second mortgages who need the information on current loans or life insurance cash values And it always works out just fine once the banker understands. And I would say most of them do. And then banks, of course, also consider the creditworthiness of the individual when applying for a loan. Therefore, another win with borrowing against your life insurance cash value to pay off debts to outside banks is that this will help build your credit. Your credit score will go up as you pay off those other debts to those other banks, unless you already have the highest possible score. And life insurance loans are not looked at on credit reports. When trying to figure out what type of life insurance policy you should have, or maybe your budget is extra tight and you don't feel able to begin implementing the infinite banking concept just yet with a whole life policy, just keep in mind that the best life insurance policy is the one that's in force on the day you pass away. And since you haven't been told of the date of your expiration, that could be any type of policy, but the most trustworthy type that is fully guaranteed to pay your loved ones until you're age 121 is whole life. Oh gosh, saying this just made me think of another story of someone that I met while I was at Think Tank. He is either a current IBC practitioner student or already a practitioner, I don't remember. He shared a story with me that he is actually a pilot who flew for Delta. He had fallen in love with the infinite banking concept and was working with an advisor, applying for his own policy. So the insurance company set out examiners to do an exam. Because when you apply, there is a version where you could apply for accelerated underwriting and possibly skip the examiner. But sometimes it makes more sense to go through full underwriting, or sometimes the underwriter simply requests it. And full underwriting consists of an examiner coming to your house, a third-party lab company that the insurance companies work with. So somebody comes to your home, or you can usually go to a clinic if you prefer, one of the third-party clinics, not your own clinic. And they will take blood and urine and take height and weight. Sometimes they'll do an EKG. It just depends on what the underwriter has ordered based on how much life insurance you've requested or age sometimes. So this gentleman who was a Delta pilot said he was so thankful for that exam. He said that from that exam, they discovered something terrible. And if it wasn't for applying for life insurance and that third-party lab company discovering what was wrong, that he wouldn't be here today. Then he cursed the day that he chose to take the COVID vaccination and is no longer able to fly an aircraft. It was just crazy. I'm surrounded by so many life-changing stories in this industry. It is sad that he can't do what he loves and be a pilot anymore, but I'm also happy for him that he discovered IBC and now loves this and has been working hard to learn and teach others about IBC. Anyhow, if you know you need something and are not sure what you're able to afford or what you'd be able to move forward with at this time, and you would like to partner with me as your life insurance agent, advisor, and/or IBC coach, feel free to reach out to me. You can reach me at Valerie@alphaomegawealth.com. I would love to learn more about you and how I can possibly help you. I look forward to meeting you. Thank you for listening today. Thank you for sharing the podcast. Remember, you can find me on Facebook and Instagram as well by searching Infinite Banking Mastery. And I have a website, infinitebankingnorthwest.com. Thanks again, everyone. Take care and have a great week.
This is thepodcastfactory.com.